Let's talk about the earnings now. Emami came out with its earnings wherein the volumes declined by 3% because the rural demand continues to be a tad bit sluggish. Plus, the margin pressure is something that the street is watching out for. Is the worst over or not? That's the key question that we want answered. And let's put that question across to Mr. N.H Bhansali, CEO, Finance Strategy and Business Development and CFO at Emami Ltd. Thank you so much for joining us. First up, a question with respect to the demand environment itself. You are the company which has one of the highest exposures to rural demand. This time around, there was weakness to the tune of around 3%. Do you expect a bit of reversal in the coming quarters?
Yes, we expect somewhat improvement in the coming quarter. And December relatively had been good, but there has been a mixed reaction in the January. But hopefully, with summer setting in and the placement of the summer products being started, we are hopeful of delivering a reasonable growth in the fourth quarter.
Okay, so since you talked about the summer products, also wanted a sense with respect to your winter products, because this time the winter set in late and that's why the Q3 impact we saw a bit of tepid growth. But does that mean that Q4 will see better, winter product sale?
Not really, because the winter, this was the warmest winter, in fact, in the history, in the past histories. And the pipeline has been reduced to a great extent in the winter products. Nobody is going to fill in the further products now. The trade would not encourage that. And so our focus is more on the summer products. And the growth is expected from the summer products going forward. Though there could be some marginal increase in the winter products as well, but we are focusing on the summer products.
Good afternoon, Mr. Bhansali. This is Cheryl also joining in the conversation, and talking about your volume growth. It's fallen for a second consecutive quarter. If you look at for the quarter gone by, there was a decline of about 3%, and you all have attributed to a sluggish rural demand as well as late onset of winters that has actually impacted the volume growth. But do you see it stabilizing anytime soon, given the fact that it's second consecutive quarter that we saw a decline? So where do you see volume growth headed from here on?
Yes, we expect the quarter four, as I said, would be much better than the quarter third, and volume growth has to improve and would improve. Is in the February, March, we expect the placements of the summer products, and we also expect that the season is also moving, and so would have a positive impact on our results.
That's a take coming in, but the other key thing that the street wants answered is the outlook on margins. Is the worst over? Because this quarter as well, there was still a pressure on the margin. Do you expect it to meaningfully improve in the coming quarters?
Yes. The fourth quarter, we expect the margin to improve by 200-300 basis points. Kind of the fourth quarter would be much better in terms of margins. The material prices which had been reducing, but because of the high inventories which we were carrying earlier, and going forward also in the fourth quarter and in the subsequent period also, we expect the COGS to improve from the year, and the margins need to improve. See, what had happened in the third quarter, since in the COVID periods we have had a substantial expansion in the margin, but pre-COVID we are at almost the same level at which we were in the pre-COVID level. So on an annualized basis, we are targeting a kind of a 27% kind of an EBITDA margin for the current year, and that's still very high compared to the industry.
Okay, so 27.
And in the current quarter, just to forget to mention, we are at an EBITDA margin of 29.9%. That is also the highest in the industry.
Sure. So gross margin, or rather EBITDA margin of around 30% is what you are targeting. Gross margins are expected around 67%. But just quickly wanted to understand, what could be the growth outlook for FY24? Could there be a double-digit growth which is likely to happen, or do you expect it to be high single-digit?
We are targeting for a double-digit. So for FY24.
10 to 14%, a little higher than that, mid-teen. Could you help us get a bit more color?
We are in the process of, we are figuring out, and we are in the process of, we have not many plans in terms of extensions in the existing brand, growing the core, and many other initiatives. And so double-digit we definitely expect, but where the double-digit it would be, we are still in the process. We are in the drawing board.
All right, Mr. Bhansali, we leave it there. Thanks so much for joining us in the show to give us a take about how the quarter gone by for Emami was, and all the best for the remainder of FY23 as well as 24. That was Mr. N.H Bhansali of Emami. But from one